In this video, I will show you how you can trade gaps that you probably seen forming during the market close on the weekend, and we will use a 2022 ICT mentorship to do so. I will show you multiple examples to make sure you understand perfectly. Using Trader Edge, we will keep track of the results and analyze the data at the end. So what we can see sometimes when we come back on Monday is that during the weekend, we get a gap, right? So for example, on the 20th of November, we came back on a Monday and we left this gap, right? Because on Friday, we closed at this point. And then on Sunday at the market open, we open at this point. So what I usually like to do is put where we left out on Friday. So I'm not using this level, right? This is not the level I'm using. I'm using this level where we left on Friday. Then what I usually like to do is wait during the New York session. So starting at 7 a.m. And I'm going to look for the gap to first get filled. Then after the gap get filled, as usual, we will wait for a displacement and then a break of low. In this case, since we're looking to sell, and then a comeback to the fair value gap. So we saw that we took out all of the liquidity that was residing above the 2 days high, and we went directly to fill up the gap and look the reaction from this point. See how we came back directly, we filled up the gap, we had a displacement right there. We took out this low and then this fair value gap. See how interesting this is? So now all we need to do is put the order right there, put the stop loss above, and then just go for the first target, which is in this case, this low in here for a 3.5. And a take profit. That was a simple example. Let's check now the second example, which happened actually the day right after this day. And sometimes what's amazing with filling up those type of gaps which forms during the weekend is we usually see price continuing way back down. So another target could have been the 2 days low, which happened at the London close at 5. And it even went further until the New York close at around a 9% just on one trade. So let's add the 3.5 to Trader Edge. Alright, so this example is a little bit more advanced since it's not a gap that happened during the weekend. It's actually a gap that happened during the trading session. So you know at the 9:30 we have the market open. And look what happened at around 9:34. For whatever reason, I'm not sure, maybe a news or something like that. But we saw this gap. Look how we closed at this point and then we opened up at this point. And just like the weekend, what I'm aiming for is to have a fill where we left out. So let's check the reaction once we come back to this point. So we see price coming back up right there. See how we rejected perfectly this level, came back down. Then we saw this small displacement right there, but no lows taking out. The only low that we see is this one. So we would not be able to use any fair value gaps in here. So let's check maybe on a second leg. There you go. See this huge displacement? This is a clear displacement. I love those type of candles. See how it's covering all of those previous candles. So clearly, this is a very significant fair value gap. And then we also broke those lows right there. So all we need to do is put the order right there, cover once again the closest high, and then go with the first target, which is above 2.5. In here, 2.5, exactly. So a nice rejection directly into the fair value gap.
Sensational.
And see how far we're going after filling up such gaps. It could have been like another 1 to 7, but let's just keep it easy and then add the 2.5 to the Trader Edge. So I need to be honest, those type of gaps don't form very often. Every Monday I'm looking for a weekend gaps to be filled and then take the trade. Just keep that in mind if you see another gap. So those are pretty rare. Based on my experience, I didn't see that many, but those are very interesting every time for me. So in this third example, I wanted to show you the importance of each step. In this case, we came back on a Monday where we left out this gap right there that you can see. So let's check how we react from this point. Starting on the New York session at 7 a.m. So we go back, fill up this gap, have a nice reaction right there, have a nice fair value gap right there. But you can see that we broke no highs, right? So this would not be a trade. Let's check if we got a second leg. So not even a second leg. So that's just an example that you should not just take a trade because we filled up a gap, like a lot of people are suggesting. We do need to see each step getting respected before taking a trade. Of course, we would need to backtest more days to have more data, but just on those two examples, we will get a return of 6%. And if you need a backtesting tool, check out the description for the Trader Edge link. They even give you a step-by-step book on how to find your edge and 7 days for free to test it. And if you're looking to increase your win rate, you can check my last video where I'm adding another rule to my model of the 2022 ICT mentorship.